Short squeeze, GameStop, AMC. What's happening? Reddit, Wall Street bets. What a fun day. What a fun day. What a fun week. What a fun time to be in the market. What a great time to be sitting here doing my stuff. Good to see you, Jennifer. Thanks for saying hi. Good to see all of our guests and our viewers. Thanks for tuning in. It's going to be a fun one today, guys. One topic on the agenda today. We're talking about what's happening in the market with respect to the short squeezes that are happening with respect to a whole bunch of stocks, specifically GameStop. I'm bringing in my dad in the show. He's over in Marchand, Manitoba. I haven't seen my dad for a really long time. I don't know how long. I want to say 6 months or something. I miss the guy. We're trying to get this going here technology-wise. Good to see you, Arvin. Good to see you, Mike. Good to see you, Adam. Thank you all for tuning in. Those of you who don't know, I'm Rob Tatro from robtatro.com, portfolio manager here at Canaccord Genuity Wealth Management and at the Tatro Wealth Advisory Group. Quick disclaimer, nothing we're doing here should be taken as independent investment advice. I don't know your personal situation. Aside from that, let's get right into it. So those of you that don't know what is happening, first off, by the way, hi, awesome. Great to see you, Renzi. Keep saying hi. Keep saying hi. Love to see you guys. Love to see you guys there. I'm going to start by explaining what happened to these stocks. So these stocks, largely dogs of the stock market, have been kind of pinpointed by short sellers. We'll get to what short selling is in a sec, but these short sellers have gone out and said, okay, these stocks are dogs. We don't like these stocks. Adam left. A couple other, Adam left. What's his first name? Richard left. I don't know. Anyways, left from Citron. They've gone out and they said, we don't like these stocks. These are dogs. The online community has said, you know what? Let's stick it to them. Let's stick it to the man. Let's stick it to Wall Street. Let's stick it to them. Now, it's unclear to me when it started, but the quick story, and we'll get into the details of the story in a sec. Andrew left. Thank you, Derek. The quick story is that over time, they started buying the stock with the intention of hurting the short sellers. So you buy stock, you buy more stock, you continue to buy stock. What happens if you get buying pressure on a stock? The stock goes up. The stock goes up. The stock goes up. Eventually, this became a phenomenon. I'll give you the quick version first, then we'll get into the details. This became a phenomenon. So, AMC, GameStop was the first stock that this happened to. Gained 10%, 20%, 50%, 100%. The stock went from, being a $10 stock to being a $20 stock to a $50 stock to a $100 stock to now a 300. Where's the latest number? Closed today at $347.51. That is not a joke, ladies and gentlemen. $347, $350 stock. That company today is worth $25 billion. So how did this happen and why did it happen? So remember that if you're short selling a stock, let's get into what a short sale is. You are buying shares of a company, borrowing shares of a company, and you are selling them in the market. If I want to sell a specific stock, I ask a financial institution, can I borrow your stock? I borrow the stock and I then sell it in the open market. Now, the deal is I have to buy that stock later and cover my short. Being short a position is effectively betting on the stock going lower. I profit by the stock going lower. Okay, so the stock goes down, I make money. That's a short. Okay, so the thing with shorts is you don't need to put all the money up front. You can borrow. You could borrow money to be short. Okay, so if I want to be short a stock, I go out and I borrow, and I don't have to put up the whole amount to borrow that stock. Oftentimes, I'm borrowing stock for extremely cheap. So I'm borrowing stock, I'm selling it. Let's say I'm Andrew left from Citron. I borrowed GameStop. I borrowed a ton of stock. I'm shorting it, and then I'm telling everyone who will listen that I am short this stock. I believe this stock is a dog. I believe it's going to go down. So we talked about that. So the story there is it's a short, and the Reddit community. Now let's talk about this Reddit community. First of all, I'm going to describe what's happening, guys, and I'm going to take questions. GME, hold to 5,000. All right, thanks, Joel. Appreciate the comments. I love hearing this. By the way, tell me what's going on in your lives, guys. Tell me what your thoughts are on GME. But if you were on Reddit by any stretch, there's a forum called Wall Street Bets. All right. And on Reddit is an online community, mostly younger adults, probably millennials. I don't know, but mostly young adults. And it's effectively a large chat room. They go on there, and I look back into the history of this, and I spent quite a bit of time in this Reddit forum. And by the way, if you've never been in this forum, stay away. But regardless, I looked, it started kind of in 2019, 2020, early 2020. There started to be some talk, some momentum about how they would disrupt Wall Street, how they would hurt the short sellers. Someone got the idea, I'm buying 100,000 shares of GME, GameStop. Said, I'm buying 100,000 shares, tweeted it, and threw it out as a challenge to everyone else on Reddit. Said, if you guys all buy shares, this stock will go up. So now this doesn't work if the 5 of us do it here, or if the 50 of us do it here, or if 100 of us do it here. But if you have a limited float of a stock, and we'll get to limited float in a sec, but if you have a limited float for a stock, and most people are holding that stock or shorting that stock, and there are very few trades that are very few stock that are openly traded, you don't need that many buyers to move the stock, right? So what happened? Stock up a little bit, stock up. And I spoke about this earlier, stock up a little bit. Now, remember, the important thing that you guys need to know is when you're borrowing money to invest to short a stock, you don't really have to have all the money. But every day, every single day, they mark your short to market. That means they will say, what is your stock worth today? Oh, it's worth $100. You need to then you need to put more capital up front to protect that position, because the financial institution, they don't want to be on a hook for a huge loss. So what happens is that the shorters, they have to put up more capital, put up more capital, put up more capital. They have two choices. They either put up more capital or they close out their short. If they close out their short, that means they buy back the stock. And if they buy back the stock, what do you think happens? The stock continues to go up, right? So this is called a short squeeze. A short squeeze, not a squeeze bunt like my Blue Jays do. By the way, rep to the Jays, big signing today, big couple signings in the last couple of weeks. Good work on the GM. I think I'm excited about the upcoming year. Not as excited as I am about the Winnipeg Jets, but still excited. So a short squeeze, all right, you're squeezing the short because every single day there's less and less and less and less money, and you have to keep putting money. Eventually, you're sick and tired of putting money in every day, and you say, I've had it, I'm pulling out my hair, I'm out. Get me out of this position. So this is what happened. Now, the short sellers, as of now, 2 reports came out today saying that they were effectively throwing in the towel. So what's the other one again, guys? Remind me of the other short seller. There's Andrew Leff from Citron, and the other one is what? Mandeville or Maudeville or Mandolin or whatever the other one is. Someone will fill me in. But basically what happens is those 2 allegedly today announced that they were throwing in the towel. Now, they run hedge funds. So I don't know. My take on that is, are they really throwing in the towel? I mean, they've held it this long. Did they really cover their shorts? I don't know. And if someone has a definitive answer to that, I'd love to hear it. But as far as I've seen, they have not yet covered their short until I see, definitive proof. Because that's the goal here, right? Like, I'm not a Redditor, and I'm not going to Melvin Capital. Thank you, Mike. Melvin Capital. So Melvin was the other big short. Melvin and Citron, the 2 big shorts, they allegedly covered their short today. Now, I'm not a Redditor, but I do know that if I was playing this game, and I'm not, and I never would, and I have no interest in doing this, but if I was playing this game, the end goal has to be getting those companies to cover their short. Like, there is no other end game to me, in my mind. If I was playing this game, if I'm playing this game, the end game has to be they cover their short, they buy a bunch of stock, the stock rallies, and then once they've covered their short, mission accomplished, sell your stock, take the profits, and get out. Now, that would be if you were incredibly kind of crafty and you were trying to structure a short squeeze and you're trying to manipulate the market. That's how you would do it. I'm not saying that you should do it. I'm not saying I would ever do it. By all means, please don't attempt to manipulate the market ever. First of all, it's a violation. And second of all, it's not going to end well. But if they were doing this for that reason, you would expect that the profit taking will start at some point. Now, I don't know when that is, but in my mind, you're probably asking me, Rob, what do you think? What do you think of these companies? I'll tell you quickly what I think of these companies. And I will also tell you that I'm not here to make fun of or make light of what's happening in the Reddit community or I'm not here to chirp. I don't want to chirp those guys and gals. I have no interest in doing that. I just want to tell you what I think is happening, and I'll give you my advice as well. First of all, we steer clear of this because the only way you're making money here, the only way you're making money with a short like this, with buying GameStop, is you are hoping and expecting that someone will pay you a higher dollar at a future point than today. That is different than pretty much any stock buying that we do and most advisors would do. When we buy stocks, we buy it because it's a representation of future cash flow or profits, hence the term price to earnings. Now, I know some of you are going to tell me, yeah, but Rob, this is different. This is different because these guys don't care about PE. They don't care about the profit that this stock is generating. They truly couldn't care less if this was a stock or if this was a piece of I don't know, crystal, or if this was a Bitcoin or a piece of paper. The idea here is to get the short squeeze happening. The idea is to get them to cover that squeeze. The idea is to make money. I don't, in the back of my mind, I really don't think that the Redditors, the Wall Street bets, are doing this because they want to lose money. I really don't think that they're trying to lose money. And if you disagree, please tell me. If you think there's just mass confusion and they don't understand how the stock market works, feel free to share that with me. But I truly do think that they're trying to make money. Now, my concern, obviously, is there's no possible way this company's worth $350. You guys know that. And if you don't, I'll tell you why. And I'll tell it to you this in 10 seconds if you want. But one, in the history of this company being existent as a public company, in the history since 2002, it has made $13. $13 of profits in 20 years, 19 years. Okay. So if they were to continue that profit, you would need to own this stock until 2,500 or so before you ever get your investment back. So are you buying it because you expect to make your money back in 400 years? No, right? No one's that stupid. So they're not buying it because they think that the actual stock is worth, 50 cents per year. Okay, we're going to make our money back in 400 years. Perfect. Let's do that. No, that's not the idea here. They're doing it to stick it to the man and to make a play. Now, I said I would explain why this company is not worth $350 or $25 billion. By all means, if you have opinions, please do share. Tell me if you disagree with me. The reason we're here today is we're talking. We're having a chat. One, we're trying to explain the situation. But two, I'm happy to debate this with anyone. If anyone wants to debate this with me, I'm happy to do it. And I'll get to my opinion in a sec. And hopefully my dad can join in. I know he's having issues with the internet, but hopefully he can join in because that man has seen more short squeezes than I've seen hockey rinks. No, I don't know, but he's seen a lot of short squeezes in his life, and I hope we can get him in to tell me about some of the short squeezes that he saw in the 70s and in the 80s. I know he was on the bad side of one in the early 80s on a penny stock, and it's not fun, let me tell you. So, okay, why is this company not worth $25 billion? Well, first of all, their total sales in the last quarter were $900 million, and they lost about $5 per share in the last year. Okay, so the total profits for this company over the last 2 years is minus $11 per share. Okay, and they have negative growth, earnings growth, and revenue growth for 11 consecutive quarters. This isn't a tech play. This isn't a fintech. This isn't a company that's hoping to quadruple their revenue or quintuple their revenue over the next year and the year after and the year after. No, this is not what's happening here. GameStop is a store that rents video games and sells video games. When's the last time you guys went to a Blockbuster? I don't know. For me, I've not gone in forever. I do remember buying, I vividly remember buying, Madden 2005 out of GameStop. So I do remember that. Looks like we're getting my dad in. So I'll bring him in. The video might be a bit laggy, but I do want to bring him in. I'm going to keep talking. There's the man, Claude Tatro, my father. Great to see you, Claude. How's the internet down there?
Hey. I don't know. I guess it's, I don't know. We'll see.
Okay. So here's the thing. For those of you that don't know, this is my father, Claude. He taught me everything I know about investments. He's been doing this for 50 years. He knows more about this than anyone on this show or anyone ever will. He's been a bond trader, an advisor, a stock broker, an options trader, a bond trader, an investment banker. Anyways, he's humble. He's all like fidgety now that I'm pumping his tires, but he's an extremely smart guy. Claude, I miss you at the office. We miss you at the office. Good to see you here. What a crazy week, eh? Tell me overall your thoughts, and I know you've heard me talk maybe for the last 10, 15 minutes here, but tell me overall your thoughts about this week and the short squeeze that we've seen.
Well, everybody on TV is saying that they've never seen anything like this, but that's partially wrong, because short squeezes but precedented, because it's just billions and billions and billions of dollars. Short squeezes used to happen, and they still do in thinly traded, penny stocks, kind of stocks, of which I experienced it firsthand back in 1989. But the magnitude of this one is mind-boggling.
Yeah, it definitely is. Claude, I don't know, producer Mox or Diggs, I don't know if there's a way to maybe get the video down from Claude and just get the audio. Maybe that'll be better and less lag. I'll get back to you in a sec, Claude. So Claude was saying there, definitely we've never seen the magnitude of a short squeeze like this. Definitely, we've never seen that. To me, I'm incredibly excited to be here to talk to you guys about this today, because I don't remember, like, there are maybe 4 moments in my investment career that I can kind of compare to this. Definitely 0809, the collapse in 0809 is one that I remember, where I was, how I felt, how much it hurt inside my stomach. I remember the flash crash, vividly remember the flash crash where the Dow fell like a couple thousand points in like 10 minutes and then got it all back. I remember that. I remember not understanding what was happening. I remember oil going negative. I believe the last time Claude was on the show, oil was negative. Oil was going negative. Reminder, oil negative means you had to pay someone to take a barrel off your hands. You were selling something at a negative price, meaning I was giving you a barrel of oil and I was giving you $30. So that happened in 2020. That was crazy times. And then this short squeeze story where effectively the online community is moving the market like we've never, ever seen. And I think, if you haven't gathered this from me by now, there will be serious repercussions here with respect to these investors, because there's no way this ends other than a lot of people losing a lot of money. And there are some people that are going to be incredibly smart and they're going to make a lot of money. The individuals that got in early, that pumped the story, that pushed the story, that spread the story to others, saw the stock go up, they're exiting at some point here. The volume that we're seeing, right? The volume that we're seeing, there's not enough capital. There's not enough capital on the planet to continue this buying, forever. So I think I would ask Claude. I don't know if Claude, can we still hear you? Claude, are you still there? Okay, so Claude? Yeah, we're having serious delay here. But I think I know what Claude would say is that eventually, what I would like to ask my dad and what I would like to ask you guys is, assuming this is truly a stock, and we both know that stocks can't trade at, what did I say, 900 million in sales, total sales expected for the year about 4 billion in sales. It's a $26 billion company. So we're talking 6.5 times sales. 6.5 times sales with minus $11 of profit per share. So the P to E is kind of an infinite number of P to E. But more importantly, if you take a look at the profits of the last 20 years total profits, the stock is trading at 30 times that number, 30 times the entire history of the profits for this stock. So fundamentally, there's no possible way this company is worth that. And I mean, you can't make an argument. There is no argument that this company is worth that much. If you're making this play, you're making it because you think that buying's not done. You think this Reddit story is going to continue. It's going to be in the news tonight. People are going to talk about it tomorrow. It's going to be on another board. People are going to talk about another board. And it's just going to continue to multiply. If you're buying the stock now, that's what you believe. There's no way you believe that this stock is worth $26 billion because they're not selling video games right now. The stores are closed, and they were selling them in 2005. I remember we were all buying video games, but I mean, I have a PS4. You don't go to the store to buy a game. You buy it through your PS4 or 5. You just buy it. You press your button on your controller and it buys the game and it charges your credit card and it's gone. So I'm not trying to say fundamentally there's no way they can maybe turn it around and be profitable. I don't know. I think there's a couple arguments. One is that video games are back. Two is that they can maybe sell their old games and their old consoles and get a bit of revenue there. But I mean, they have a footprint. Retail is, I don't want to say retail is dead, but retail is pretty much footprint. I'm being told that the box stores are still open. Fine, they're open, but they have no sales. So like the stock, like you can't generate. The stores are still open. Thank you. I wasn't sure if they were still open. The stores are still open in some areas, but I mean, they cannot possibly generate, like they've lost money pre-pandemic. So this year is going to be a disaster. So anyways, maybe they turn it around. Maybe they become somewhat profitable, maybe, but there's no way they're going to generate $20 of profit per share when they've never done that in the history of 20 years, right? So if you're buying it, as a reminder, if you're buying the stock, you're thinking that eventually it's going to go higher. So if I were to ask Claude, if I were to say, Claude, how do you feel that, why is this maybe not like Bitcoin? Couldn't this maybe be like Bitcoin? Couldn't this maybe be the fact that people are just buying a thought, a concept, and it happens to be that GameStop is the choice, the choice of the investors. They chose GameStop, and that's going to be the new Bitcoin. And I think my dad would say, Rob, you're crazy if you think that's possible. I don't know what he'd say, but it's a thought that I've been thinking of, because I don't think there can be a sane, reasonable human with a degree or with any training in valuations of stocks, or with a CFA or with a portfolio manager degree that can possibly think that this company will ever be worth $26 billion. Like, I don't think there's an argument. I'm willing to listen. If anyone's got an argument for me, I'm willing to listen. But I don't think anyone could possibly say this company's worth $28 billion. So in other words, you're betting on the short squeeze. So how does this end? It ends when nobody else has capital. Eventually, my dad always says, you go to a party. If he were here, he'd say, you go to a party, right? Super fun party. There's only one door, right? And it's a great time. Everyone's dancing. We're having a good time. And everyone's getting into the party, right? We're getting in, cool, fun times. We're in the party. Celebrate. It's good tunes that are playing in the back. And then all of a sudden, a fire breaks out. Well, you got 500 people in a house. 5 are going to get out. The rest, they're dead. They're dead. They're dying, unfortunately. So maybe I pushed the analogy a little bit. Sorry if I offended anyone there with the analogy, but that's how this ends, because there will be no buyers, right? Who wants to buy this stock on the way down? Is anyone going to want to buy this stock on the way down? So at some point, maybe this thing goes to 400, maybe it goes to 500, maybe it goes to 1,000, maybe it goes to 1,500. I don't know. But at some point, there will be no buyers left. Nobody will be buying the stock because the story's over, right? All the Redditors, everyone's got all their life savings in. Everyone's sold their bank stocks and their tech stocks, and they put everything into this GameStop company. And then there's no one left to buy. So what happens? Well, guys start taking profits, right? And once you start taking profits, that's selling, right? So some people are going to start selling. Once you have selling, you have selling pressure, stock goes down. If you have no bids, right? If you have no bids on a stock, you're going to get gap, what we call gap down, gap down, gap down, gap down. It's going to be a complete disaster on the way down. Put that quote, mark it down. You heard it here first. You heard it from everyone. It will be a complete disaster on the way down. And people that will want to sell will not be able to sell because the stock will be falling so fast. Now, it might take time. I don't know when it's going to happen. But unless this becomes a godlike phenomenon where people truly don't care about what they own, they're owning an idea, a concept, like a Bitcoin type scenario. And I don't see how that could ever happen with shares of a publicly traded company, because at the end of the day, you own that company. So that's my opinion on this. It's ending really bad. The fire is going to burn, and there's a lot of people that are going to burn inside the fire, unfortunately. Sorry to tell you guys. If you have this stock, I'm not your portfolio manager, I'm not your advisor, but you should strongly consider selling, taking profits, getting the heck out while you still can. There's a question here from Reg about shorting. Reg, can you short the stock now? So I looked into this today, actually. You can. It's extremely expensive. Typically, you pay 0.3 to 0.5% to short a stock. Right now, we are looking at 80%, some are 100, some are 150% cost to borrow the stock to sell it. So it's not cheap. On top of that, I don't think you want to be caught in the crosshairs here, Reg. Like, who knows when this the party is still going, right? Like, yeah, come on over, let's have some tequila, yeah. Like, the party's still going on right now. So do you want to be the one who's saying, I think the party should end? You're betting real money on that. You might put a short in, right, at 300, 350, and the stock rallies to 400, 500, 600, Reg. Then what do you do, right? Because one thing we know for a fact is we don't know where the top is going to be. Impossible. Nobody knows that. We cannot know that. It's short term. It's not trading on anything rational, so we don't know where the top will be. Therefore, I would advise you against shorting, Reg. If you really want to gamble and you want to gamble against this, take a look at buying puts. I mean, the put market is incredibly expensive right now. This is by the way, we had the biggest option trading day in the history of the stock market this week. I believe it was Tuesday or today, one of the 2 days, the biggest ever. So I'm not sure if Claude's, if it's working. I'd love to get Claude back here. I'm not sure if it's working, but if not, I'll just keep answering some more of the questions right now. So Reg, let's see if my dad is there. Let's see if it's not enough. I can't see the guy at the office. I can't see him on this either. I will say my grandma, who's 95 years old, who's living in the old folks home in La Broquerie, beat COVID. For those of you that have 95-year-old grandmas or grandpas that had COVID, I was pretty pumped. She got COVID, and she's so tough, my grandma, and she just shook it off like a fighter after a prize fight. Just dusted herself off and beat COVID. Ma mère Tétro, love you. I doubt she's watching, but if she is, shout out to you for beating COVID. Let's take a question here from AMC. It's an AMC question. Do you think the wave of save AMC is just a trend? Okay, so AMC, the story's a little different. Every stock is a little different. The reason I spoke so much about GameStop, guys, in this show is because there is no real argument that GameStop is going to make it. There's no real argument that GameStop will somehow be the most profitable company. I don't think you can make an argument. So I think if you want to ask me about AMC, the story there, remember, AMC was a $30 stock. AMC was a $30 stock. It went down to, what did it go, $2 or something? I'll pull up the chart here. It went down to, what did it go, $2? Something like that. Yeah, $2. It was a $30 stock. It went down to $2, $32. It went down to $2. So the story there is, are people going to completely stop going to videos? What are they called? Movie theaters? Is that over? Is that fully over? I don't think so. So you could, thank you, D-Money. You could make an argument that AMC might turn it around. So, it's a $20 stock today. So, if AMC actually turns it around and people actually start going back to movies, and I take my kids to see Frozen 4, and I take my kids to see Minions 5 or whatever the next one comes out, maybe the profits could come back. So I kind of get that story a little bit, but it is the same story. This is a short squeeze that's happening. This is their newest target. Producer Mox mentioned a few in the video. I think there's BlackBerry's another big one that's been targeted. At least BlackBerry, they kind of solved some of their patent issues, and you can make a case for the price. Nokia is another one where the market rallied a ton. When's the last time you guys saw someone on a Nokia phone? 2006? I don't know. I don't know, actually. And I should know because I'm the one, I sold Nokia cell phones by the boatloads back in the day. I used to sell cell phones at Rogers Air Source AT&T at the Savatel Mall in Winnipeg, Manitoba. And I sold 100% of the cell phones I sold for a 3-year period. 100% were Nokias. But anyways, that's no longer the case. So, those stocks, they are a short squeeze story, but you can somewhat make a case that the earnings might somehow down the line pop up, and maybe you get profits, right? Maybe you get profits. And once you get profits, you start paying down debt and et cetera. So that's one story that I think is possible. So I think they're a little different. Now, the other story I want to mention here is, why don't you just raise more capital? My dad, someone asked me this today, and I actually pulled it up. Why don't they just raise capital? Do you guys know what a capital raise is? A company can issue shares at a price. They do a deal with an investment banking firm, and they say, I want to sell some of my shares at a specific price. The solution to this, if Claude were here, Claude would say, The solution to this is for GME or AMC to just issue shares, issue a boatload of shares, and just do it what do you call it, Claude? A reverse auction where people can bid up for whatever price they want for shares. And eventually you put up 1 million shares, 2 million shares, 5 million shares, 10 million shares, and you just collect the cash as a company. You pay down the debt, right? You collect the cash, you pay down the debt, and what do you have left? A ton of cash, just a ton of cash. Sell the assets, there's nothing left, sell the assets, and then distribute the cash back to the unit holders. That would be an unbelievable story if they were to actually do that. And I mean, I don't know if there's any legal obligation or moral obligation to a company doing that, knowing that they're kind of taking advantage of people who don't know what's going on. And I don't know if they can actually do that. But I know that AMC today, they did a raise. They did 5 million shares, and they raised, I believe, $310 million or something. What are they going to do that? They're going to pay down their debt. They're going to survive. AMC is going to survive because they sold shares at double the price, triple the price that it was 2 weeks ago. Now, the other thing that's happening here that I need you guys to know is insider trading. So this is publicly disclosed. If you're an insider of a company that trades on the New York Stock Exchange, the Dow, the Toronto Stock Exchange, you must disclose when you sell shares of your company. It's for transparency. We want to know if the president, the CEO, the chief marketing officer, we want to know if they're actually long their company, if they're short their company, if they don't like it, right? That's a big sign, right? So what happened last week? You guessed it. In case you didn't know, in case you haven't been following what I'm saying, the CFO, Chief Financial Officer of BlackBerry, and the Chief Marketing Officer of BlackBerry, so let's start with the Chief Financial Officer of BlackBerry, sold every one of his shares, every single share that he owned freely, he sold. Every single share. The Chief Financial Officer. If you guys are a business owner out there, think of who knows the most about your company. Probably your CFO, right? Who knows the financials inside out? Who's the person that knows the most? Your CFO. They know the company, they know the revenue, they know the profits, they know the future expectations, they know exactly what's happening in the company. He sold all of his shares of BlackBerry. Okay. The Chief Marketing Officer sold 2/3 of their shares of BlackBerry. So this is public information. So take that for what it's worth. But if they think their stock is overpriced, make your own conclusions. With respect to GME, 4 board members sold all of their stock. I think it was a total of $3 or $4 million, roughly, something like that. 4 of the directors on the board sold all of their stock. Now, the ironic part here is that they didn't sell it at $350. They sold it at $25 and $30. They saw their stock go from $10 to $25, and they were like, oh my God, we're rich. We're loaded. Our worthless company is now worth way more than it was before. We struck it rich. Sell everything. They sold all of their shares at $25 and $30. And here we go. We have a company that's now worth $350 a share. But the point is, they thought it was dramatically overpriced. They sold their own shares. So, I own shares of Canaccord. I mean, I don't think you'd ever want to see me. And I mean, I don't have to disclose this because I'm not an insider, but let's just put it this way. You know what? I shouldn't talk about my own stock. Let's not do that. I'm not going to talk about my own stock, but I don't want compliance on my case. So I'm not talking about Canaccord, but let's just say that if you're an insider of a company, hopefully you're not selling your own shares in the market. And if you are, that's a screaming red flag to me. And if you're selling them at a price that's 1/10 of what it is in the market today, wow. Now, the next question I want to look at is, Stock Watch. Buzz, this is a good question here. I'm going to put your question on the board. Thanks for watching, Buzz. Reddit's Wall Street Bets has been ganging up and moving the markets long and short for well over a year now. Yes, they have. They're on the radar of the Stock Watch folks. They're trying to counter Wall Street insider powers. Yeah, we definitely know that. I think the next question that you're going to ask is Wall Street going to do anything? Are the regulators going to do anything? Is Janet Yellen, is Jerome Powell, are they going to do anything about this market manipulation? Here's my take on that. I don't know. I expect you're probably going to see something. And if my dad were here, I know what he'd say because I spoke to him about this today. He'd say, no one's going to win here, Rob. This is going to be a lose, 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 lose situation. Forget about the short sellers. We don't care about them. We really don't. Like if they lose or win or lose, we don't really care. It's 2 or 3 companies. It's not really Wall Street, right? It's not Wall Street. It's a few companies. And who cares? Who cares about those companies? What really matters here is the people that are going to buy at the all-time high. There's going to be some individuals that have bought at the absolute all-time high all the way up to and leading up to the all-time high. Those guys are going to lose a lot of money. So they're going to lose. Then the market itself is going to lose, and the trust for our financial system is going to get eroded. In my mind, there's already enough distrust about what we do, right? Here I am trying to just make absolute sure that everything I do is in the absolute best interest of my clients, and forget about the paperwork and all the stuff we got to do and all the, it's getting, you probably know this, but if you don't, if you're a client of mine, you know this, the paperwork required in our industry is getting absurd, so much so that it's hurting the client, because the clients can't possibly read all the paperwork we give to them. I mean, they're supposed to, but do they? I don't know. And yet we're supposed to be protecting the client, right? We want to protect the client. So what's going to happen? There's going to be less trust. There's going to be individuals that are going to say, it's a racket. I don't understand it. People are manipulating the market. It's just not good for the trust of our financial system. So first of all, investors are going to lose. Second of all, are the financial system will lose. And third of all, the people that are going to suffer are the investors in 2 and 3 and 4 and 10 years, when there are new rules that are put into place that make it much, much more difficult to just manage money and buy stocks like you normally want to, right? This will make it more difficult, because at some point there's going to be a stop put, there's going to be something that's going to make it harder for Redditors and for Robinhooders to do it. Now, I guess you could probably debate, should we do something? What do you guys think? Should we actually enact legislation to protect the Wall Street bettors of the world and the Robinhooders of the world that are convinced that this stock is going to $10,000? Should we do anything to protect those? So, I'd love to hear your opinion on this, and please feel free to chime in, because I think this is the $1 million question. Should we get people to wear bike helmets? I don't know. I'm listening to you. It's probably yes, right? It's in their best interest. Should we protect the investor, or would we get a backlash? Would the investors say, screw you, Rob, stay out of my life. I know what I'm doing. I want to buy this stock because I know this thing's going to the moon. How dare you prevent me from buying this stock? How dare you prevent me from doing what I want to do, which is trade and just do it on a daily basis and up, down. And I want to do that. So how dare you? So what's the answer there? Anyone have a thought? And I truly don't know. I truly don't know the answer. Part of the argument would be, I think they need to learn a lesson, right? That would be part of the argument. If someone were to say they need to learn a lesson here, they need to know that you can't just start buying companies. Yes, genuine investors can invest without being worried. There we go. So one argument is saying you got to protect them, and the other argument is saying, you can't protect them. Let them learn their lesson. And then they won't do it again, right? It's kind of like my kid and the stove, right? Although now we have induction ovens, so they can't actually burn their hand on the stove. But the other argument is, we have a job as regulators. We have a duty to protect investors. We have a duty to make absolutely sure that we are acting in the best interest of investors at all time. It's the paternalistic argument. Should the government intervene or should it not? And I'm not trying to start a political debate by any stretch. I think this is a pointed question. And I think you'd get a whole bunch of different opinions if you asked, what makes the most sense for individuals that are doing this. So I think we should, to a certain point, if the regulators are regulatoring the people, who exactly is regulatoring them? Well, we are. We elect officials every single election, and we tell them to make rules, and we tell them, protect me, put laws in place to protect. Dean is asking a question here. Will the hedge funds be protected if they lose? Absolutely not, Dean. I'm hoping, I don't know if this is a rhetorical question or if you're being sarcastic or if you're being serious. No, they will not be protected. The hedge funds are going to get crushed. They are already down about 9 billion on these trades, on just the GME trade this year alone. 9 billion on that one trade. I know some of the largest hedge funds are down 25, 30, 40% already. They were so sure, which, by the way, is the big gamble with shorting. If you're ever unsure about whether or not you should short a stock, think of this story. think of this story, because the bottom line is shorts, about 65% of shorts, I saw a report today, don't quote me on this number, but I saw it on BNN, 65% of shorts end up losing. Why? Why do all the shorts end up losing? They lose because over time, stocks appreciate in value. Corporations are made to be profitable. Corporations are going to generate 10 to 15% ROI. Some are generating higher than that. So like they're made to go higher. So you're taking a huge bet there. That's a big bet if you're shorting. So just be careful is all I'd say if you're shorting. And I would, here's a decent comment here. Deepak, I appreciate you chiming in. Based on years of investing experience, there should be a limit placed on percentage of net worth allocated to risky gambling style bets. Yeah, I mean, we can go to the casino tonight. I mean, I can't technically go to a casino, but I could go on my phone and gamble my life savings if I wanted to, right? Like there's nobody that's stopping me from doing that. Or I don't know, maybe there is. I don't know. Maybe someone knows. But I could walk into a Vegas casino and put my entire net worth on black or red if I wanted to. And in fact, some guy did this on YouTube, and I think he hit it, if I'm not mistaken, and doubled his net worth. But why should we? I guess Deepak, the devil's advocate, would say, why should we? Why should we? It's a buyer's market. It's a buyer beware market out there. And I know the answer. It's you're not ready for it, right? Would be the answer. You're not ready to do some trading here. I went on Reddit today, guys, yesterday. I've been spending some time there, and I can tell you, I took some screenshots of some of the photos, and it's like there's a clear disconnect between investors. I believe some of us here are probably investors where we are buying future cash flow. We want to invest in something, real estate, infrastructure, private debt, stocks that are going to generate a profit, or not all stocks generate a profit. When I bought Amazon for the first time, it was not profitable, right? And neither was Shopify, neither was Snapchat, right? There's a lot of companies that aren't profitable, but you're hoping for expected future profits. You're saying, I'm paying a lot today for this company, but it's on a crazy growth trajectory, right? Well, the crowd on Reddit, and I went and I actually took some screenshots, and I took like there's no rhyme or reason with respect to their opinions, but the vast majority of the comments that I read are, this stock is going to $10,000. This stock is going to $100,000. There's a guy who made a huge dissertation arguing as to why, if they choose to never sell, right? If they choose to never sell, the stock is assuredly to go to $1 billion. $1 billion for a company that has 5,000 stores which are closing and 900 million in sales. So per share, billion per share, which would be a market cap of, I don't know how many trillion. It'd be more market cap than the entire GDP of the planet probably. But regardless, such a disconnect. And in fact, I saw comment after comment after comment where it's, I'm selling every one of my stocks and I am buying GME. I'm selling every one of my stocks. I'm buying GME. I'm selling my bank stocks. I'm buying GME. That breaks my heart a little bit. And I don't know about you guys, but it actually hurts me. I wish I could tell that person, like, please don't do that. Please don't do that. Like, no, like it's okay to speculate for a little bit of your money. Please don't sell your diversified portfolio and buy GME at $350. Please don't. There's nothing I can do. I just read the comments, and what do we do about those guys? I don't know what the answer is, but it sucks. It sucks to see that. BlackBerry we covered, AMC we covered, Nokia we covered. Bed Bath & Beyond is another one. By the way, if you haven't noticed, the reason that these stocks sound like they're out of favor is because hedge funds, which are typically right, they generate more returns, I'd say on average, depending on the market cycle. They generate good returns from time to time. They're usually right on some of these calls. They're picking stocks that they think are a thing of the past, right? To go into a store, a Bed Bath & Beyond, what are the other ones? Nokia, to go into a store at GameStop, the idea it's the opposite of the Amazon trade, right? It's the opposite of e-commerce, right? Most of these shorts. So the ironic part in all this is the Robinhood generation has made a ton of money buying fintech, buying e-commerce, buying cloud-based computing, buying data, buying electric cars, You know, they've made a ton of money. The Robinhood generation in the last year, there's been a ton of money made by speculating on the anti GameStops and Bed Bath and Beyonds of the world, right? They made money on e-commerce, and now they're taking a gamble on the opposite trade. They're going back. They're saying e-commerce, screw that. We want to own stores. We want to charge $60 for someone to come in for a video game and collect $8 of profit off that and pay salary, and whereby other stores are just doing it electronically. Buzz is putting another comment here. Yeah, Wall Street bets went dark. Yeah, this happened. I tried to read. It's just too much buzz, I guess, right now. I don't know. They can't handle it. There's been a couple other boards. It's intentionally locked down, but back up. Yeah, I think they wanted to slow things down. Just crazy what's happening there. So by all means, I'm looking for questions here. I was supposed to have a chat with my dad, and it's too bad. It would have been fantastic. He's got so many good stories. I really wish it would have worked for his internet. My dad's much more entertaining than I am, and he's much better, wiser, sager. Is that a word? Sager than I am. Let's anything else with respect to? Oh yeah, guys. Hey, you're watching the show. Take a sec to subscribe. Right? Take a sec to like. If you're watching on LinkedIn, on Twitter, on Instagram, if you're watching on YouTube, there's a big red button there. Subscribe. If you're watching on Facebook, share it. Do like our friend BX legend D Money did, and share it with all your friends. Hi, Robert Klein. Good to see you. Okay, so there's a question here. How long could this last? Forever? Okay, this is probably the $1 million question. So how long could this last? Okay, so I said earlier I had no idea when the top will be. It's really tough to predict. It's really difficult because the power of the news cycle, right? There's so much news cycle happening. There's so much. The power of our phones is so, like, my wife tonight just asked me, "What's going on?" Thanks, Heath. My wife asked me, "What's going on with this e-gaming company?" And I'm like, "No, it's not an e-gaming company. It's GameStop, and it's the store that we used to buy video games for back in the day." And she's reading about it. And my wife does not care or follow the market whatsoever. So that's a barometer for me. So that means she's seeing it. That means, you know, your I don't know, your bus driver is seeing it. Your father-in-law who doesn't follow the markets is seeing it. That means people who are outside of the circle are seeing it. And I know, because I get a ton of calls, I get a ton of texts, and I know how many people are seeing it. So the cycle's not over yet in my mind. What's the top going to be? I have no idea. Diego, and I wish I could tell you, but I'm not going to speculate on that. I'm just here to chat about what happened. It was a short squeeze. The buying hasn't stopped. We now have a $26 billion company that lost, hundreds of $1 million. The total profit in the history of this company is $12 per share in the history of this company since the IPO. Total profit, $12. 10 consecutive negative quarters of earnings growth and profit. And we have a stock that is up, 35 times or something like that, 20 times this year, 2,000%, something like that. So Deepak is telling me irrational exuberance is right. I don't often prognosticate on bubbles, although I have in the past. I prognosticated the cannabis bubble. I believe I prognosticated the Bitcoin bubble back in 2017. I pretty much nailed those almost perfectly. By the way, feel free to go back and check the vids on those back in 2017. But this is one where if I wake up in a year from now and GME is at $350, I don't know. What should I do? Eat my shorts or something? I'm not gonna do that, because what would I actually have to do? Maybe I will eat my shorts. I'd have to put it in a blender. Would I have to put it in a blender? And I want to actually do it. I remember Troy Westwood did this. He was going to run down the street naked or something if the Bombers won the Grey Cup. Or I forget what he said, but you know what? He didn't do it. He backed out. So maybe I don't know what I could do. I'm listening for ideas. If anyone's got any ideas of stuff that I should do, if GameStop is a $350 stock in a year, I'm all ears. Again, I don't know when it's going to end. I don't know what it looks like, but it will end, ladies and gentlemen. To answer Reg's question, be very careful if you want to short this stock. I'd probably stay away from it. It's going to hurt you if you don't get it perfect. If you want to look at puts, those are potential puts or options. They're derivatives that are based on you buying the right to sell a stock at a future date at a specific price. So you buy a stock, I own the right to sell a stock at a future specific price. I looked at the price of puts today. Derek and I looked deeply and looked long and hard on prices of options because like there's a ton of money to be made, right? On the way down. There's a ton of money to be made on the way down. And the neat thing about options is you have time. You can go 1 month out, 2 months out, 3 months out, 6 months out, 9 months out. But again, I'm not going to encourage anyone to do that either. Again, I don't know you. I'm not your advisor. Dealing in options is incredibly speculative. Don't do it unless you know exactly what you're doing and you've kind of talked to your advisor. Be prepared for a ton of losses if you do that. But that's probably easier than shorting. I would not be shorting this if I were you guys, even though I'm a portfolio manager and I've said that I think these things are overpriced. So I'm not sure what else we want to talk about today. I was going to take 20 minutes. Again, I wish my dad was here. Next time, I promise you guys we'll get a good internet connection with my dad. We'll get him in the city in Marchand. Miss you, Claude. Miss Mom, too. Be nice to see you guys. Looking forward to doing that. Chamath went in and bought low and sell high, made 500,000 hedge fund makers. Okay, so a couple comments that I'm not understanding, but that's okay. I thank you guys all for the time. Take a sec to subscribe. Take a sec to like and host. And by the way, we put out great content. Every morning, I put out a 3-minute market update. 3 minutes every single morning at 8:10 Central Time, 9:10 Eastern. It's what to watch for. It's a podcast. It's YouTube. It's on, I think it's on Facebook and kind of wherever, kind of all over the place. So take a sec to subscribe to that. Additionally, I got a really neat project coming up I want to tell you guys about. It's called Unboxing Gretzky. It is coming. It's an alternative asset class, which is hockey cards, sports hockey cards. We're going to be chasing a 1979 Gretzky rookie card and expect that to be super fun with a very neat live event that you've never seen that's going to be a blast. So subscribe. Make sure you follow our Instagram channel. There's really neat reels and IG vids or whatever they're called, Mox. Reels? I think they're called Reels. Yeah, Reels. And then also coming soon, a TikTok account. Real soon, I'm going to have a TikTok account, and I'm going to put everything out there in 30 seconds, 60 seconds. Maybe I'll do some dancing. No, I'm not going to be doing dancing. I'm going to be talking about the stock market, saving, building wealth, optional ways to do it. Thank you so much, guys. Any other questions, by all means, shoot them. If you'd like to book a no-obligation consultation, please go to www.speaktorob.com. We'd love to book one for you. Thanks so much for tuning in, guys. Stay posted. Stay on top of things. Subscribe, and I'll see you on the other side of the short squeeze.